I believe that gold is going to be a much, much larger percentage of balance sheets. Is that 50? Is that 70%? Most likely, yeah. To be exact, that number at its peak was 73% of balance sheet assets.
Wow.
So we're below 20% now, or about 20%. Do your calculation where you think gold prices would be at those levels. We've been, over the last few years, this move from, call it 1500s to 3000, we went from a 17% to 20% of ownership. So how much do we need to drive up gold prices if we're going to get up to 70%? Man, you start getting some crazy numbers. I don't want to sound weird here, but all I'm saying is, I don't think any of us own enough gold.
Tavi Costa, partner and macro strategist at Crescat Capital, believes gold is poised for substantial gains as countries continue shifting away from U.S. Treasuries. In an environment where central banks expand their balance sheets, whether through conventional quantitative easing or newer forms of liquidity support, gold stands to benefit significantly. This movement is not only about reducing reliance on the dollar, but also about building more resilient reserve portfolios in the face of mounting geopolitical and economic uncertainties. Central banks have been steadily increasing their gold allocations for nearly a decade, and the trend is accelerating. A growing number of institutions are now managing their gold holdings more actively, with 44% of central banks doing so in 2025, up from 37% in 2024, according to a recent Livewire survey. Additionally, 75% of central banks now manage their gold reserves separately from other assets, underscoring a strategic shift in reserve management. One central bank respondent noted that the growing market volatility is pushing both investors and central banks toward gold as a hedge. Historically, gold once made up as much as 73% of central bank reserves, compared to just 20% today. If reserve allocations begin trending back toward historical levels, Costa argues that gold prices could reach unprecedented levels. On silver, Costa is equally optimistic. While silver hasn't entirely mirrored gold's recent rally, it has still posted substantial gains, over 25% so far this year. Costa believes silver is on the verge of entering a price discovery phase where resistance levels break and prices rise sharply, similar to gold's past moves. In 2024 alone, silver experienced a 21% intra-year increase, with a 59% trough-to-peak rally. The annual average price also hit its highest level since 2012, driven by strong fundamentals and the fourth consecutive year of market deficits. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
I think gold is the ultimate, form of alternative to really protect your capital over the long term when it comes to if you're a family office, a large institution, a central bank, or even an individual. And so I think we're learning a history lesson for those that have not appreciated gold's history in real time. And we're about to learn a silver lesson, a copper lesson, a platinum lesson, an emerging markets lesson. And some say we're going to also learn a Bitcoin lesson. I'm not sure Bitcoin is really contrarian relative to all these things. And so it doesn't mean I don't think Bitcoin can do well. I just think that there's much more asymmetry in these other ideas that I think are just as compelling as Bitcoin. So I think that there are going to be a lot of ramifications from a world where gold becomes more owned by investors. Gold is extremely cheap relative to how much debt outstanding is in the system in the U.S. and other parts of the world. And as we see, countries transitioning away from owning treasuries, that should give. I love finding things that people have different views on. Majority of other people have different views on, and I can sense that investors have really grown very skeptic about the treasury market. I wrote a paper about the treasury market in 2021 about how worried I was about that whole market. I think that was a time to be worried. Now after all these moves and all these people switching their views, I'm not as excited about. It's like talking about pessimistically about China. No, the timing to talk about China was. Man, we used to talk about it in 2014, 2015. We even, launched a whole strategy to invest against the currency, against the property developers. So I think that you have to separate being an investor and being on the news world. I know it's sexy to say that the treasury market is breaking and all these things, that the debt is unsustainable. But, as an investor, we got to learn what was the outcome that came out of the 1940s era. Well, what we saw was that they basically suppressed rates at all costs. So you're really going to bet against that the system is not going to find a way to suppress rates at all costs? I don't want to do that. I think that's not an intelligent decision as an investor. I think it's highly likely we may see some sort of QE that won't be called QE, happening here. So, I much rather own hard assets, but I'm also not going to go out right now and say that the treasury market looks extremely unstable, because as an investor, that was the view you're supposed to have 3 years ago, not now. So rates are a lot higher, things are a lot different. I think that the 2-year treasury market is one of the most attractive places to be invested in right now. So that's my 2 cents. The beauty of the gold thesis is that it's got so much optionality of things that could drive the metal higher. But if you want to summarize into one thing, that's the chart you summarize the whole thesis on. Is that central banks are the largest buyer of the metal at the end of the day. It could change, but that's what it is today. And they don't own much of it. Some people like to look at the rate of change of things and say, well, we've been seeing a bunch of buying. Can this be sustainable? Look at history. It is sustainable. If the world needs to own over 50% of gold relative to their balance sheets, of which they might have to extend their balance sheet to buy, like I just said, maybe they might need to buy treasuries themselves. Now, what does that mean? They might need to do this in combination with a QE type of policy. And so, look, I'm just saying these things. I don't know what it is. I'm just saying that that's highly likely to happen. And so, if you operate under those assumptions, then I believe that gold is going to be a much, much larger percentage of balance sheets. Is that 50? Is that 70%? Most likely, yeah. To be exact, that number at its peak was 73% of balance sheet assets.
Wow.
So we're below 20% now, or about 20%. Do your calculation where you think gold prices would be at those levels. We've been, over the last few years, this move from call it 1500s to 3000, we went from a 17% to 20% of ownership. So how much do we need to drive up gold prices if we're going to get up to 70%? Man, you start getting some crazy numbers. I don't want to sound weird here, but all I'm saying is I don't think any of us own enough gold. A few things. I don't think the demand side has been to the degree that I think we're going to see. So we're far from that yet. And I think we're going to get there in very, very soon. But we're not to the place that I said yet. Like, nothing has been confirmed they're going to build those solar panels or anything like that. But I think we're going to go there. That's number one. And it's why maybe the prices have not reflected that yet. What I would say instead is that, no, just from a technical standpoint, it is highly likely we're going to get into a price discovery moment with silver in the next 12 months. And, if that's the case, it's kind of like gold, right? I mean, it's, bump into the 2000, bump it again and keep bumping into it. And then boom, and now it's price discovery, add another $1,000 to it. And, and who knows what silver could be, could be, we all know silver is very volatile, and it could be an insane amount of appreciation. Who knows? And so I respect that volatility a lot. And so I want to be exposed to the upside of that volatility mostly. I don't know where we're going to go, but I think it's another strong and very compelling opportunity that I'm extremely involved with. And want to be more and more involved if I can until I see the change in prices. Some people say it, they say it all the time. Like,
Tavi Costa notes that electricity demand is expected to surge over the next 5 years, but the supply of critical metals, such as copper and silver, remains constrained. With a lack of new mining projects and lagging infrastructure development, any underestimation of future demand could result in a sharp rise in metal prices. This structural imbalance is already becoming evident in the silver market. In 2024, global silver mine production increased marginally by 0.9% year-over-year to 819.7 million ounces. Mexico saw a significant rebound, with Newmont's Peñasquito mine returning to full production after a temporary halt in 2023, and operations at Fresnillo and Mag Silver's Juanicipio project continued to improve. Australia, Bolivia, and the United States also posted gains in output. However, the broader supply picture remains tight. Primary silver production continued its long-term decline, falling to 227.5 million ounces. Silver output from copper mining dropped by 1.8% to 219.4 million ounces, as production from several major mines contracted. While lead and zinc mines remained the largest source of silver, output was flat compared to the previous year. Notably, silver produced as a byproduct of gold mining increased by 12%, providing some relief to the overall supply. On the demand side, the picture is equally bullish. Electronics and electrical applications set another record high for silver consumption in 2024. The automotive and aerospace sectors also contributed significantly, driving further growth in demand for brazing alloys. With tight supply and expanding industrial usage, particularly in clean energy and high-tech sectors, silver's strategic importance is becoming increasingly clear. If demand projections continue to fall short, the setup for a significant price rally grows stronger. Let's get back to the interview.
I really doubt we're going to see a lot of supply come online here. I'm in the business of finding these assets that provide supply for the world, and because I think they're extremely undervalued, and I can't find assets. It's really hard. So I can count in my hands how many assets I like in the world today to own in the space that actually have economically viable and great businesses that will really that honestly won't change the supply picture of how much silver we're going to have, but are just profitable as investments. And so I don't think there's going to the beauty of gold, silver, and copper and other metals in general is that they're really different than the technology industry and other things in terms of you start to have. We know that supply is unlikely to change. It's like Elon Musk came out and said, well, we've got enough copper, guys. It's not a problem. Yeah, underground, not above ground. For us to get metals above ground to use, it's going to take time, and I don't know if I told you this yet, Gary, but I've done a whole research on which I think is going to be one of the biggest topics. I'm always trying to find what's going to be the biggest topics a few years from now. And one of the things I've been paying very close attention. So, I was very early on the inflation issue, very early on the Treasury issue. I've been talking very strongly about the dollar here recently. Wrote a letter in September of 2024 about the dollar turn and so forth, and the dollar spiking during that time. Here's my new thing that I'm really focused on. I'm really focused on electricity consumption and how we may see real issues in terms of even, who knows, a total blackout issue. I call this the potential for a black swan event. It's a little bit of hubris from my end trying to find out what's the next black swan event because nobody knows. But I just don't see, it's a clear trend on the demand side, very unclear on the supply front, not only from an infrastructure development standpoint, of which everybody talks about, but also from the mining side, like copper. We know there's copper out there, but there are no new development of mines coming online anytime soon. Silver is the same issue. Gold is the same issue. And so in 5 years, we're not even talking 10 or 20, we're talking 5 years, the demand for electricity will grow substantially from what most consultants, McKinsey and all these guys are saying. In my view, they're very wrong. And if they're very wrong, boy, I think we're going to push metals a lot higher. There has been very few firms that have been trying to understand how much capital be required to bring the metals that we need for the infrastructure boom that is going to be likely to be needed for the AI and the onshoring, because a lot of people talk about the AI, but onshoring is also a huge problem when it comes to electricity consumption. Those two things together, I think you could see a 50 to 100% growth in electricity consumption in the next 5 years. If you see that, we're not ready for this. And so the numbers I saw was somewhere close to $1.5 trillion of investments in mining alone for the next 5 years. The market cap of the overall industry is about $2 trillion. We're going to hit a wall here, and we're not spending anywhere close to this. So we're going to hit a wall. It's almost, to me, it's a real high probability event. And so how am I going to get ready for this? I don't think any of us own enough metals in this environment, because they're going to become more of a critical industry as we move on. I mean, it doesn't take a lot of, if you start just doing calculations on, all right, robonoids, those things that Elon Musk has been saying that he's going to build and we're going to have in our homes and so forth. And then they ask him how many of those we're going to have. And we're going to have more of those than we have cars. Okay, well, start thinking about what types of materials are going to be needed. How much aluminum, how much, steel, how much silver, gold, copper, and all that. And you start thinking, all right, well, what if we just do half of that? Or maybe 1/3 of that in the next 10 years? How is that going to look like? This is one thing alone, and we're not talking about any other thing here in terms of automation that may occur over this, 5 years even. And if you think that the U.S. is going to be there at some, not manufacturing for the whole world, but at least bringing it back, a lot of it, and not requiring or relying so much in China, then you would suspect that that's going to drive electricity consumption to also have an upward trajectory, of which has been flat over the last few decades. And so that changes the whole dynamic. I suspect that even partnerships with emerging markets like South America, Latin America is going to be huge. They have surplus of energy relative to how much they consume. It's the obvious move, So I'm looking for those obvious moves that I think are going to be, more obvious to other people in the future.
China is now offering its trading partners the option to use the yuan as an exchange currency backed by a tangible asset, gold. This move goes beyond logistical convenience. It's a foundational monetary shift that signals a broader strategy to reshape global trade norms. As trust in the dollar and U.S. Treasuries continues to erode, this initiative offers countries an alternative rooted in hard assets and greater financial sovereignty. As the yuan gains traction in international trade and is increasingly backed by gold, it challenges the long-standing dominance of the dollar, suggesting a future where global reserves and settlements may no longer revolve around American monetary instruments. Shifts unfolding beneath the surface of global finance are beginning to reshape long-held assumptions. With a rising preference for tangible assets and the emergence of alternative settlement systems, the monopoly of legacy currencies in international trade is facing growing challenges. As resource constraints collide with industrial expansion, particularly in the clean energy sector, the case for under-owned metals like silver becomes increasingly compelling. Gold's role is also evolving, from a crisis hedge to a central anchor in a changing monetary order. Are we witnessing the quiet construction of a parallel financial system where gold and silver reclaim their place at the center of global value exchange? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.